Welcome to BloombergQuint. Higher prices, a better product mix, and initiatives to improve operating efficiency led to a solid beat in Q3 performance for Tata Steel. While most of the brokerages around the street have lauded the debt reduction effort, how does the outlook stack up? Let's find this out from Koushik Chatterjee, the Executive Director and CFO of Tata Steel. Hello and welcome to BloombergQuint, sir. I'm going to start off by asking you about the delivery in the Q3, which has been the consolidated EBITDA is probably the highest ever that we've seen since the history. So I'd like to understand in Q4, does the company expect to replicate this sort of performance? And also, what can be expected from the entire FY22 as a whole?
Thank you, Nikki. I think, yes, we did have a very strong Q3, and it was driven by multiple factors. Certainly, the improvement in market conditions helped a lot. The cost reduction program or the cost takeout program continues, and we are seeing benefits when the market recovers. Our mix improvement have been better this quarter, and we have been putting a lot more into the domestic market than export. So all taken together, we've been able to demonstrate a very strong set of numbers, especially the numbers out of India and the Indian subsidiaries, including Bhushan or TSBSL and Tata Steel Long Products. So all of them have performed extremely well. We continue to be bullish about it in the fourth quarter. We continue to drive performance as we've done it in the past, and hopefully we should sustain.
Just wanted to understand. So you think the number would be about that 9,500 crore kind of an EBITDA even for Q4, right?
So I'm not giving any guidance. We are in steel industry. We don't give guidance. But I think all that I'm saying is under the current operating conditions and the current operating performance continues unabated. And the international market is pretty strong. There has been some softening in the past few weeks, but even then, it's certainly very robust in almost all geographies. We're seeing spread increases and the price increases in other geographies like US, in the mainland, in Europe, China, and Southeast Asia. There have been movements, of course, but the average level still remains buoyant. We're looking at how the Chinese, post the Chinese New Year, how the economy reacts to typically a slow season for a few days and few weeks. And but from our internal perspective, we are certainly focusing on continuing the momentum now.
Mr. Chatterjee, a little bit of negative surprise from the European division. That's probably on account of the one-offs that we've had there. Minus a loss of around 3,436 rupees per ton for the European unit. Could you explain the one-offs? And also, do you think these one-offs can actually, can recur again in another quarter? What sort of performance can be expected from the European division going forward?
I think that's true. If you take out the one-offs, the underlying is an improvement from Q1 to Q2 to Q3. The one-off is related to the reversal that happened on account of the employee grants in Netherlands, because there are some qualificatory criteria which we were the grants were essentially for distressed companies and who are not able to push revenues, but we have not kind of got into that zone. And there are some carbon provisions that has happened for purchase of carbon. So I think these two, if you take out these two, there will be a significant improvement from Q1. And now the market spreads or the felt spreads are improving in Tata Steel Europe. So we should see a better Q4 than what we have seen in the first 3 quarters.
And the carbon provision that you were talking about wouldn't exist in Q4, right?
We've done with most of it. There will be still some, but the underlying performance will be strong enough to cover that.
Okay, let's talk about your debt, because I think most of the brokerages around had an issue around the whole leveraging scene out there. But that has come down significantly in the 9 months. Further, you've guided upon a 12,000 crore kind of debt reduction in Q4. What gives you enough confidence that you'd be able to meet this guidance at this point in time?
So fundamentally, our entire strategy has been on cash flows, and the focus as a company all across divisions are on the free cash flow numbers. which doesn't come overnight, but we have been working very hard on our capital allocation. We've been working hard on our spend, cost takeouts, and on working capital release. And as you have seen in the second quarter and now in the third quarter, our focus on free cash flows, it gives us the leverage to reduce leverage. And I think it is important that we continue that way. Of the guidance of more than 12,000 crores, we've already completed a fair bit in January and in currently in February. So I think we are in good course as far as the guidance is concerned, and we'll continue to pay debt as an enterprise strategy across Tata Steel.
Mr. Chatterjee, when you say fair bit in January, what that fair bit number is, if you can just provide us with a ballpark estimate?
Few thousand crores is what I can tell you just now.
Okay. Also, what is the optimal leverage that the company is considering before embarking upon KPO2? Because probably that's the number most of the street is probably looking forward to at this point of time.
So my sense is it's not necessarily a sequential part. An optimal leverage is a leverage which is across the cycle. So we, as a company which has been growing, we have said in the past that anything under 3 is good, because it is important to be in the zone of say 2.75 to 3. If there are opportunities and the internal cash flows remain strong, we will certainly keep paring the debt down. That's not a problem at all. And as I said, that's part of our strategy. As far as KPO is concerned, we've already mentioned that we are restarting the capital allocation to the pellet plant and the cold rolling mill. And those are both margin expansionary projects, short payback projects, especially the pellet plant. And therefore, we think that we should take this on priority and complete it. It will also help on the cost position as far as the entire Tata Steel is concerned.
Talking about your projects here, what is the estimated capex for FY22 and what is the timeline for CRM and pellet plant?
So the CRM pellet plant will take say about 13 to 15 months to complete. We'll try to do it within that period, and I think we are very confident of doing it. The CRM is the it's not the full part. When we say CRM, it is essentially the PLTCM, the tandem cold rolling mill, and I think that should be done within that time frame. The capital allocation for next year is what we are working on, and hopefully we'll give an appropriate guidance when we in due course of time.
Okay, so maybe by Q4 is when you're going to give out the capex plan for FY22, right?
Yeah, sure.
Okay. A bit about your auto sales, because that has registered significant improvement from 470 KT in Q2 to 690 KT in Q3. Your word on is what is the kind of negotiation that we're expecting or we have obtained from the month of January?
So that's an ongoing process. My commercial colleagues are always on top of the situation, and we try to focus on what the market needs. We also value our auto customers for the long-term relationship and the way we work with them together as far as new models are concerned. So it's it is a league lag phase that continues every now and then, depends on the cyclicality of the business. But more importantly is that we continue to work with the auto customers on their new models, new grades of steel, and ensure that we have a forging relationship which is a win-win for both companies or all companies.
Mr. Chatterjee, just to understand the basic nature of these auto contracts, I think there's 6 months contracts in nature. Any ballpark estimate, maybe a 15 or 22% kind of an increase that we're expecting from the previous 6 months? Any kind of ballpark figure that you can help us with?
So these are currently under negotiations, Nickey. So I wouldn't kind of want to talk about commercials on this conversation, but these do follow. Yes, it is 6 months, and there are some 3 months, there are some 6 months, but mostly 6 months. And these readjustments do happen. It doesn't happen right on 6 months. It drags on depending on where the cycle is and so on. So it's currently on with the conversations that are happening. Many of it is getting stitched up. So let it all get completed, and more importantly, we continue to service our customers well.
Okay, I would have been happier if you could tell me if it was a lower end or at the upper end of the double-digit guidance, because that would help us understand the realization in a little better way.
Yeah, so you will get it. I'm not saying that, but I just think that at this point of time, it's still ongoing, and I wouldn't kind of venture in talking
Okay.
commercials. Yeah.
Okay. In terms of your exports, the figure has actually been sliding, fell to 490 KT in Q3 from 1.19 MT in Q2. What is expected in terms of realization as a whole, at least for the export segment for quarter four and also FY22 as well?
So exports, see in Q1, we that was a risk mitigation plan where we kind of moved up our export portfolio and took advantage of the, at that time, the situation was very distressing in the context of the shutdown or the lockdown that was happening in India. So that was possibly the highest ever exports that we have achieved. After which we have bringing down the export proportion. In proportion, Tata Steel long term has typically been about 10-15% of exports, and I think we will calibrate it down to that level, focusing primarily on the domestic market. It is more profitable. The export prices are, though, at this point of time, continue to be very robust, and there is a differential price in the exports compared to a differentially higher price in exports than compared to the domestic prices. But you take into account other costs involved and so on. So exports is a part of the overall portfolio, but I think it's broadly about 10-15% of our total volume. And that's where we would come down to in FY22.
Okay, and at this point of time, export realization and domestic realization, what's the difference between the two numbers?
About $30-40 still.
Okay, sir. Also, a word on the cost pressure due to higher coking coal prices that we've been witnessing. What kind of financial impact can we expect in Q4? And also do you see that rising further going, probably for FY22?
See, for to be fair, the coal prices have been fairly subdued for a long period of time. For in this year, it had actually the coal prices had gone down below iron ore prices at for many months in this year, and that's unusual, and that's also because of the geopolitical fallout that was happening. I think the coal prices, which has increased in recent times, will reflect after a few months onto the PNL because there is a supply chain lead time by which that prices come in. The index, it is indexed, so that's not so much of an issue in the sense that it will reflect in the prices. It will be more an impact in the towards the end of the third quarter and in the next year, depending on how the prices move.
Mr. Chatterjee, last question that I have for you in that case, because you're running out of time. SSAB deal failure and what happens to Dutch assets right now, and also are you interested in Rashtriya Ispat Nigam? These are the two questions that I have for you.
So SSAB, I won't say a deal failure. I think it depends on the risk appetite. It was an initial conversation that was happening. We opened up for diligence and more details, and they kind of in their own understanding, they were very keen. They have come out public and said that if you look at the transcripts of Martin's conversation or in the analyst conversation, saying that Imaudan is a fantastic facility, but it depends on each one's risk appetite, on size and other things. So I think that's fair to them. I think we are focused on ensuring that Tata Steel Netherlands focuses back on the performance, and it delivers true to its capability, and that's what we are currently focused on. As far as RINL is concerned, it's too early to say. When it comes more formally, we'll evaluate and decide.
Okay, so we'll leave it at that. Thank you so much for taking out the time and speaking to BloombergQuint. Well, that was the management of Tata Steel. Pretty confident in terms of debt reduction. Has already reduced the debt by more than 2,000 crore in January itself, as per the guidance of 12,000 crore. It remains to be seen if the free cash flow continues to exist for the company and the company manages to outperform the kind of performance it is shown at least for the December quarter. With this, it's a wrap. Thank you so much for joining in.